Hello, no warm welcome. You've joined us on Markets at Lunch right here on ET Now. I'm Ashesha Adwari, and it is turning out to be a soft session. We have not seen any major action in today's trading day. The Nifty is just about flat, sitting with a cut of 0.2% as gains, and now it is sitting at about 23,520 mark. Nifty Bank, that continues to underperform because that index is sitting with a cut of 0.7%. And in terms of sectoral movers, we have defense sector, and a couple of stocks from the defense basket are performing poorly in trade today. MTAR Tech, for instance, is down 6.5%. Astra Micro, Dynamatic Tech, Data Patterns, Coach and Shipyard, all of them declining in excess of 2% in today's trading session. But let's switch focus to commodity markets then, and MCX has launched silver 100-gram futures today, marking a significant step towards improving accessibility for retail investors and small physical market participants. With India's silver demand and imports surging amid growing industrial use in sectors such as solar and electronics, the new contract could deepen participation and enhance price risk management. To discuss this in greater detail, we are now joined by Mr. Shivanshu Mehta, Head of Department Bullion at MCX, who's now joining us. Mr. Mehta, afternoon. Thank you so much for joining us today. And congratulations on the new silver 100-gram launch that you've done today. What is the rationale of launching this particular future, and what kind of market opportunity do you foresee as a result of this launch?
Thanks, Ashisha. I think you've pointed it out rightly. See, MCX is a leading global commodity exchange, and especially when it comes to bullion, by the number of contracts traded in options and futures, it has a global position. Now, our bullion basket already has smaller denomination contracts in gold, from 1 gram onwards. And in silver, we have added this to the portfolio primarily to assist the smaller jewelers and the hedgers. With the prices having gone up, they should be able to fine-tune their risk management requirements, is the primary objective. And also, it also paves the way for an organized investment into this commodity. And we have seen recently that liquidity has been rather robust, even up to 6 months ahead in smaller contracts. So based on the industry advice, etc., we decided to do this, and it should also be seen along with our other move where we have invited the Indian domestic refiners. We already have 4 of them, so we want to expand that basket so that India's import dependence gets reduced and recycling also finds impetus via deliveries on the exchange.
Mr. Mehta, how useful will this contract be for small jewelers and bullion traders who are looking to hedge silver price volatility? Because we have seen a lot of volatility of late, especially after the West Asia conflict broke out. How will this particular contract help in hedging any kind of volatility in silver prices?
Absolutely. The contracts of MCX are already serving the nation as a domestic price benchmark. And most of the value chain pricing is done with the reference to the MCX prices. In keeping with that, silver is a product which, is also, prone to disparities, internationally. And therefore, a smaller denomination silver contract further helps fine-tune the, spot to futures integration and the price discovery via the MCX platform, such that hedgers and smaller jewelers are able to actually match their, business cycles of purchase, of inventory hedging, as well as giving a fixed price. So tremendous use cases are already there, and it's our privilege to actually pave the way for the smaller and medium jewelers to actually come and hedge via this contract, as also the retail participants who want to, take delivery. That facility is also available in our contracts.
And could the contract eventually help improve price discovery for India's physical silver market as well? Is that the rationale behind coming up with this kind of contract?
Yes, of course. The Indian silver industry uses the MCX contracts for hedging already, and also for pricing of their, physical transactions. Having said that, when you have a contract which also has domestic refiners, India-based refiners, and which is further being expanded. It creates a local, price discovery. It helps a price benchmark emerge of a local domestic nature, as also domestic silver can get recycled. So all of these, objectives are actually met via a liquid platform like the MCX futures, thereby actually serving what exactly you're talking about. Yeah.
Understood. So that's as far as the rationale is concerned. And the government also recently increased import duty on silver. How could higher duties impact trading volumes and hedging demand on MCX, especially with the new launch that you have done? And could elevated import costs lead to greater use of futures contract by market participants?
No, we basically have a contract which has a hedging facility for not only the international price movements as well as the exchange rate, but also the custom duty tariff. So it actually is a three-way comprehensive hedge. And like I said, we are already focusing on recycling of silver within India. That is our focus, and we continue to serve that.
And are you witnessing a structural shift in investor preference towards silver due to themes such as renewable energy, electric vehicles, and electronic manufacturing? Are we seeing increased participation for silver futures contracts?
Well, as any industry actually, develops its demand use cases, the risk management requirements, automatically and naturally go up, whether it's a commodity like gold or copper or silver. So that is a trend which over the years we have witnessed, and as you can see, options has actually come of age, and MCX is the largest exchange by number of options contracts traded globally. So we have seen a five-fold increase in the turnover. Definitely, listed jewelers, unlisted jewelers, bullion traders, refiners, the entire spectrum of the value chain. The usage of these contracts for hedging is definitely something which is on the rise, and it's a continuous, trend over the past few years.
So that's as far as the demand trends and customer participation, or rather investor participation, is concerned. Mr. Mehta, thank you so much for taking your time out, and congratulations once again on coming up and launching this 100-gram silver futures contracts. Thanks so much for joining us today.
Thank you.
And shifting focus then, Bank of America